Welcome. When building professional financial statements, the integrity of your data depends heavily on how Excel is configured. Before you enter a single transaction, you must ensure your software preferences won't interfere with your modeling. On a PC, navigate to Options and then select Formulas. Under the Working with Formulas section, it is crucial to uncheck Use Table Names in Formulas. While table names can be helpful in some contexts, financial modeling often requires direct cell references for transparency and easier auditing. Next, move to Proofing, click on Autocorrect options, and select Auto Format as you type. Here, you should check Include New Rows and Columns in Table to ensure your ledger grows automatically, but uncheck Fill Formulas in Tables. This prevents Excel from making assumptions about your column logic that might lead to errors. For Mac users, the process is slightly different. Go to Excel Preferences, then Tables and Filters. You must ensure Automatically Expand Tables is checked, but Use Table Names in Formulas and Automatically Fill Formulas remain unchecked. These manual controls are your first line of defense against automated errors in your debits and credits. To build an accurate balance sheet or income statement, every account name must be spelled identically every time it is used. Even a small typo like cash with an extra space can break your SUMIF formulas later. We prevent this using data validation to create drop-down lists. First, highlight the specific cells in your journal where you want the account names to appear. Then, click on the Data tab in the ribbon and select Data Validation. From the Allow menu, choose List. In the Source text box, you will select the range of cells that contains your master chart of accounts. By doing this, you're controlling the input. Users can only select valid account names from your predefined list. Additionally, when managing these tables, you should utilize the Total Row feature found in the Design or Table tab. Once enabled, you can select a cell in that total row and choose Sum from its specific drop-down menu. This is a vital check for equality, allowing you to instantly verify that your total debits match your total credits before you move on to the next step of your reporting. The ASUM-IF function is perhaps the most important tool for moving data from a general journal to a financial statement. It allows Excel to handle the heavy lifting by totaling values only when they meet a specific criterion. The function requires three distinct arguments. The first is the range, which is where Excel should look for your criteria. This is typically the column in your ledger where you've entered account names. The second is the criteria, which identifies exactly what you are looking for. For example, if you are building an income statement, your criteria might be the text revenue. Finally, the third argument is the sum range, which contains the actual numerical values to be added together, such as your debit or credit amounts. Imagine you have 100 transactions. Instead of manually searching for every cash entry, you write equals ASUM-IF, point it at your account column, type cash as your criteria, and point it at your amount column. Excel instantly scans the entire list and provides a total, ensuring that no entry is overlooked and no math error is made. Automation in Excel also involves logical testing using the IF function. This function checks whether a specific condition is met. If it is, Excel executes one command, and if not, it executes another. In the context of financial statements, this is most commonly used for error checking and balancing. For instance, you can set an IF function to compare your total assets against the sum of your liabilities and equity. Your formula might look like this: IF assets equals liabilities plus equity, then display balanced. If they do not match, the function could display a warning like error out of balance. This provides an immediate visual indicator of the health of your model. By setting up these logical checkpoints throughout your workbook, you ensure that any data entry error is flagged immediately, rather than being buried deep within your financial reports where it could cause significant issues later. As you build more complex sheets, understanding the difference between relative and absolute references is vital. By default, Excel uses relative references. This means if you have a formula in cell B1 that refers to cell A1 and you copy that formula down to B2, it will automatically change to refer to A2. This is incredibly useful for calculating rows of data where the relationship stays the same. However, there are times you need a reference to stay fixed, such as when referring to a specific tax rate or a single total balance cell. In these cases, you use an absolute reference by adding dollar signs, turning A1 into $A, $1. The dollar sign before the A locks the column, and the dollar sign before the 1 locks the row. Mastering this distinction allows you to copy formulas across entire spreadsheets without worrying about your calculations drifting away from their intended source data. Efficiency is the mark of a skilled Excel user. When dealing with large sets of financial data, you should avoid manual clicking and dragging. To select all cells in a column quickly on a PC, select the top cell and hit Ctrl-Shift down arrow. On a Mac, use Command-Shift down arrow. Alternatively, you can hover over a column header until the pointer turns into a black down arrow, and click once to select the entire column. Once your data is selected or your formula is written, you need to fill it down the column. The fill handle, that small green square at the bottom right of your selection, is your best friend here. You can click and drag it, or simply double-click it to automatically fill the formula down to the last row of your data. For those who prefer the keyboard, selecting the range and hitting Ctrl-D on PC or Command-D on Mac will instantly duplicate the topmost formula into all selected cells below. These shortcuts aren't just about speed, they ensure that you don't accidentally skip a row in a large dataset, which is a common source of error in manual financial reporting. In conclusion, creating reliable financial statements in Excel is a systematic process. It begins with the right environment, configuring your preferences to disable automatic formula filling and table name structures. It continues with controlled data entry through data validation, ensuring every account name is precise and ready for calculation. By mastering the arguments of the SUMIF function and the logical branching of the IF function, you can automate the consolidation of your data while building in robust error checks. Finally, by leveraging keyboard shortcuts and understanding the nuances of absolute cell referencing, you can work both quickly and accurately. These techniques move you beyond simple data entry and into the realm of professional financial modeling, where your workbooks are as reliable as they are efficient. Practice these setups and shortcuts in your next project to see the difference they make.